Ladies and gentlemen, good evening. This is Christopher Aaron. I do want to thank you for tuning in. It is the 14th of March, 2018, and I was on the road last week at the PDAC conference. This is the largest precious metals and base metals mining conference in North America of the year. So I did take last week to go to that. I was unable to post a video last week, but I am back to the plush but not overly ostentatious iGold Advisor Studios here, and I want to thank you for tuning in. There is a lot to look at as we update the price action in both gold and silver. And I wanted to let you know just off the bat, I wanted to get into one of the guiding philosophies of this channel, just to show you a little bit about where I'm coming from and how I perceive the markets. It's not so much just about looking at charts or looking at numbers or examining the fundamentals of the precious metals, of which, please remember, I am one. And by the way, if the last video bothered you a little bit or got you a little bit worried, good, because these markets are in a state of flux. I will not be repeating the same message here week in and week out. I will adjust my message depending on what I see in the markets. That is what got me back interested in the precious metals in 2015. There were a lot of people that were very thankful that I started making videos in 2015. And I will tell you this, if I notice a different message setting up now in 2018, I will bring that message to you, whether or not it is positive or negative. But how do I arrive at this form of analysis? And I have some people who have written questions both on the channel, and a number of people who have sent me some emails on this topic over the last number of weeks. And I wanted to address this because I really think it's important. If you're looking at these markets and you're trying to make sense of what is happening here to the prices of gold and silver and the rest of the capital markets as they are interrelated, there's this question that comes up, and a lot of times people will say to me something to this effect: you cannot predict the future by looking at the past. And so therefore, there is no point in looking at the charts. There is no point in examining the data from the past, because what happens in the future is in the future. And I want to tell you that I flat out disagree with this statement. I think this is 100% false. In fact, we can predict the future by looking at the past. And I will say, not only can we, but, for example, according to quantum physics, everything that we observe in our lives, every single thing, has happened in the past. Let's look at a few examples. For example, when we gaze up at the moon in the sky, we're actually looking at an image of the moon, which is 1.2 light seconds in the past. We're not looking at the moon right now. We are looking at what happened in the past, and we are making a determination: where will the moon be? How will the moon look 5 seconds from now, later on in the night, the next day, the next month? What? Based on where it was in the past. When we look at the sun, similarly, we are looking at an image 8.3 light minutes in the past. We are not receiving light from the sun at this moment now. This is an image from the past, and we are making predictions about the future based on what? The only thing that we have available. All we have is data from the past. If we want to bring it even a little bit closer, stick your arms out in front of you and look at your own hands. What are we actually looking at? We are looking at an image of our hands approximately a meter out in front of us. Let's round it off to a meter. Light moves at 299,792,458 meters per second. So therefore, we're looking at an image 1 divided by the speed of light seconds in the past. So we want to bring this into predictions. These are some examples of things that we observe We will bring this into the precious metals in a moment. But let's look at some predictions around us, not just the financial markets, which we focus on here. How do we predict the weather? How do we look at weather patterns? Where do we get the data from to predict what is the weather going to be like tomorrow morning? Should I wear a raincoat? Should I bring an umbrella, even if it's not raining as I leave the house in the morning? How do we know this forecast? It is based on data that we gather from the past. How do we make predictions about air traffic patterns? Where are airplanes going to be at any given moment in time? It is based on where they have been in the past, which flights have taken off in the past, which flights have taken certain routes in the past. Therefore, where will they be in the future? Final little data point here, whether or not it is safe to cross the street. Maybe we're even crossing Abbey Road here, as the famous foursome once did. How do we know if it's safe to cross the street? We look down the street, we look into the past, and we gather the data to determine whether or not it is safe. We look at the past. So I hope that I'm making this point here. I'm just trying to explain a little bit about where I am coming from as an analyst. We look at these charts. Let's bring it up now. We're focusing on gold and silver because as a stacker of gold and of silver, from a fundamental standpoint, I do think that there's something important about these elements, about these minerals that are so rare in the crust of the earth. There is something that is important about them. But these cycles higher and lower, we have to examine the data from the past in order to have any sense whatsoever about what may happen in the future, even as you listen to this recording of me in the past. Let's look at gold in the past, over the past 3 days. Is there anything that we can determine, any usable information from the short-term perspective of the spot price of gold? We look at these squiggly lines here. This is my favorite. When people say, oh, you can't learn anything by looking at squiggly lines. Oh, we can learn a lot. In fact, that's the only place that you can learn about future prices is by looking at squiggly lines. In this case, when we look at gold, this is actually quite a consolidation. So sometimes the only data that we have available to us is not whether or not the price is immediately going to go higher or lower. What can we observe here? Consolidation. This is still data. A very strong consolidation here happening in gold. And similarly in silver, we will put this into perspective on the longer term chart, but we like to look at the short term just to see, is there any usable information? Once again, strong consolidations, lots of overlapping price data within about 25 cents here, multiple days, and actually we'll go back. This has been several weeks now of this overlapping data. What can we say? Strong consolidation. Now, nothing lasts forever, including consolidations, but this is usable data as well. So there's never a waste by looking at data. It may not be what we want it to be, which is a strong move higher or lower in any direction, but there's never a waste by looking at this data. Let us look at silver. Let's move it out now. Now, this is the chart that I was looking at 2 weeks ago. We'll bring up the handy color key here. Now, just to update this, once again, the primary pattern that we are concerned with here from the past, the only thing that we can look at, we look at past data, is a symmetrical triangle. This is extremely clear to see. Look at the number of hits. 1 on the upper, 1 on the lower. 2 on the upper, 2 on the lower. 3 on the upper, 3, 4, 5. Many smaller hits happening here. Now, this is the consolidative price action we were just looking at on the 3-day chart. If you're telling me this is random, if you're telling me this line is just hugging right here, silver is just hugging this lower line for over a month, if you're telling me that's random, please, I encourage you to find another form of analysis that works better for you. But here, when we look at this and we say this is happening immediately on this lower trend line, look at how clear this trend line is, and look how the price of silver is hugging this line. It's not oscillating. It's not bouncing back and forth between here. It's hugging this lower line. This is not random price action that we are seeing in the past. We are seeing a market that is coiling up on the lower trend line. Now, the bigger decision is going to be answered when this pattern breaks. When a symmetrical triangle breaks, and we have two options here. Yes, over the short run, silver can move higher or lower. We look at a lot of leading signals in the premium service. I'm going to show you one of those leading signals today. But when we examine this market on its own, inherently neutral, one market on its own, a triangle is a neutral pattern, all we can say is that this could break in either direction. But I'll tell you what, once it breaks, it's not going to be a neutral assessment after that point. And the break of this pattern will be early enough for us to change our projections of silver over the next year, probably 18 to 24 months, depending on which direction this breaks. I will be adjusting my forecast depending on how this pattern breaks. This will be impacting my investment thesis. This will be impacting how aggressive I get with certain trades that I make. How do I look to hedge myself? How do I look to invest in the mining sector? This pattern is going to have significant impact on that, and this is not that far away. This is going to happen within the next 4 to 8 weeks. This is silver taken neutrally. We switch over to look at gold across the same time frame, and what do we see now? It's a different pattern here with gold. You have a rising lower trend line with a flat, multiple hits on this flat resistance zone shown in black here. So if we take gold as a leading signal, which we often do, and gold is attempting to break out of its 2016 to 2018 resistance zone, that tells us the bias should be to the upside for silver. It should be. Let's put that word should in italics and bold and underline and star. Should. The bias should be to the upside for silver based on what's happening in gold. Now, gold, it's still possible that gold may have to decline further back into this green support zone. This green support zone, by the way, was identified all the way back here in July of 2017. As this successful long-term breakout was happening, we drew this green shaded zone in here to say as gold moves higher, it will most likely come back into the green support zone. It did that in December, has moved higher again. We are still open to gold needing to come back into this green support zone one more time. It doesn't have to. This consolidation here, although it looks similar to this one in 2016, it's of a different nature. The different nature is that gold has been within this zone now for 18 months. And so a third consolidation that happens in this zone is inherently different than the first consolidation that happened in this zone. Even though in the short run, yes, it's a lot of grinding back and forth. We can see that the short-term behavior is similar. We do have to place it into the context. So gold is gearing up to break the 2016-2018 resistance zone. It certainly is. Now, could silver break lower from that triangle if gold breaks higher? Could it? Yes, it would seem unfathomable. How could the two markets move in opposite directions? But I would tell you, if that happens, it will be giving us a very strong signal about what to expect from this market over the next 3 to 5 years. This will be adjusting my outlook. And mind you, I'm someone who started making videos and producing content here back in 2015 to tell people I believe this move was setting up. Okay, so I'm someone who focused on the charts back then. I'm focusing on the charts now. If you want someone who's just going to tell you that the metals are going higher year after year after year, you know where to find them. That's not what you're going to get here. I am going to stick with what I see, the data from the past, which forms a best assessment about what to expect over the intermediate term future. Now, depending on what happens here with gold and that symmetrical triangle with silver, if gold backs off one more time before breaking this resistance zone and silver breaks lower, then it tells us to watch out when we get into 2019. That will be something to look at. I still believe gold will be breaking this resistance zone. This is a very clear ascending pattern right now, an ascending triangle with rising support, flat resistance. Very clear pattern here. But if we see that almost unimaginable scenario where gold just continues to consolidate with a slight downward bias for another few months and then breaks higher, but meanwhile, if silver is breaking that pattern lower, it's going to tell us to watch out when we get back into 2019. It's going to tell us that in no uncertain terms, because it will mean something for the precious metals markets that may not be what we were originally expecting. Now, I was a little bit pessimistic in the outlook last week. I'm glad that this triangle in silver has not broken lower yet. I have not sold any silver. Some of you were worrying or sending questions about that. Have I sold and moved on? I have not. I'm still in this market. As I said, I will never sell all of my physical silver, especially at these prices. But what we are going to be looking at in the premium service is the ramifications of these series of signals that are setting up in both gold and silver. How will this look for the markets, especially if that scenario happens where silver breaks lower while gold continues to consolidate underneath 2016 highs? We will be looking at that scenario as it gets closer in the premium service, especially in the video that is going to come out in a week and a half. Now, there is a Fed meeting this time next week, so the next video that I do will be right after the Fed meeting. We've had a nice series of patterns of gold moving higher immediately after the Fed meeting. But I've been suspecting that these traders that keep getting this wrong, they keep selling gold right before the Fed meeting, and then they're caught short, and then the market springs back higher. I'm suspecting that these traders are going to wisen up. This may be the time that they wisen up. So we just see more of a grind in gold, and it doesn't sell off immediately before. Let's watch for that. If you're new to the precious metals or you would like to discuss your independent situation with me, I do work one-on-one with individuals. From those just beginning, if you would like to discuss which coins, which bars I would buy if I were you, from someone who doesn't sell them, but someone who will just give you an unbiased perspective, I do work with individuals like that, all the way to advanced traders, those looking to refine their trading or their investing in the mining sector. So thank you very much for watching. And once again, we do study the past for the reason that it is the only way that we can learn anything about what to reasonably expect for the future. If you can give me one example of something that you know or you suspect to be true in the future, and if you could tell me where that data has arrived to you by, if not the past, I would love to know it. We will watch that pattern in silver. It's a symmetrical triangle. It is within breaking within the next 4 to 8 weeks. And I will simply say once again, the direction that that pattern breaks will be impacting my forecast for the metals throughout 2018 and 2019. Thank you. I'll see you this time next week.